Test. Good afternoon, everybody. Welcome today. Let's give everybody one more minute and we'll get started. All right, I got 1 minute after, so I say let's just get this thing going. I'm excited to be here with everybody today on this St. Patrick's Day. I think there's no better place for you to spend your day than with me on this one. We're going to talk today about building a cannabis compliance program from scratch. Our sponsor today is RiskScout. And to give you a little bit of history here on myself, I'll be the one who's guiding you through this today. And my name is Kristen Parker. I am the Director of Compliance at RiskScout. I got a little bit dressed up for the occasion, like I like to do on these holidays. Just to give you a little bit of my background, I've been in banking my whole professional career. I started as a teller and have worked my way all around the bank, seems like. And the last decade or so, I have spent my life in compliance, specifically a BSA officer, and I spent the last of that time at a large community bank. The bank had a really unique footprint and a very aggressive management style for a while. So we banked a lot of businesses, a lot of high-risk businesses, and I really fell in love with that space because it's what I kind of learned and uncovered from high-risk businesses is that they are usually just misunderstood businesses, right? And so they're trying to do the right thing, but they may not necessarily know how to go about it. And then banks typically will try to keep their risk tolerances pretty low. And just getting into this space and helping banks really understand that if anybody can do it, and I did it, anybody can do it. So I come from one of the oldest hemp programs in the U.S. too. Right after the Farm Bill passed, I think it was maybe 2 breaths after it was passed, my management came to me and said, we want to bank hemp. And so I built one of the first Federal Reserve Bank approved hemp programs in the United States. So I've got a long history here in this space, and I'm excited to spend a little time with you guys talking through the program built from a compliance perspective for this space. So let's go ahead and get started with kind of the elephant in the room here. What we're really dealing with today, or was it today or yesterday came out, was one of the first enforcement actions on a federal credit union that was taken for this credit union failing to properly have controls in place to detect and report suspicious activity in regards to their marijuana banking program. And so as a result of this enforcement action, this institution is having to go and file missing SARs. They can no longer bank these MRBs or onboard any new ones. And they are being required to put an automated transaction monitoring in place. Now, this is a prime example of how you just can't go into this space without really understanding the risks associated with the industry or without the proper tools on managing the system. So the good news is that by being here today, you are one step closer on figuring how to do this and not become a story in the paper like these guys. So let's look a little bit about what's on today's agenda. Now, there's quite a bit here. Today we're going to talk, of course, about building a cannabis program from scratch. And that's going to, you can take what we're doing today and digest it into hemp, CBD, or marijuana. THC cannabis is what we call it. We're going to take a really high level approach to this program, build concept, and I want you to know that these slides are not necessarily visually appealing, but they are designed for you to be able to use as action items during your program build. You know, I'm a true lover of pictures and memes and all that, you know, but this stuff was really important for me to build this so that you could take it away and understand the core concepts of what you need to be doing to be successful in this space. I also don't want you to get overwhelmed when we're going through this stuff, because it's very important to me that you understand, if I can do it, so can you. I have no guidance on this when I did it. You are getting a leg up on it. You're getting to drive on that road that's already been paved. So at least you've got that going for you. Don't take everything we're talking today as being overwhelming, because if it's not as complicated as you really think it is. So really, to dive into talking about a cannabis program, we need to understand the basics of cannabis. And if you've been on our webinars in the past, you know, this is where we always start. And it's important to just remind everybody, and for newcomers to our webinars, that when you're building out a program, you've got to start at the very bottom or the very top and say, what am I actually going to be banking here? So we need to understand that both hemp and marijuana are derived from the same family of plants, cannabis. And we need to understand that hemp is legally defined as having less than 0.3 THC by dry weight. And marijuana is cannabis that has greater than 0.3 THC by dry weight. Now, there's a lot more complicated definitions out there about hemp and marijuana, but really at the core of it, that's what it boils down to. And that's how I think about it. CBD is one of over 100 cannabinoids found in the cannabis plant that can be derived from hemp or from marijuana. Now, CBD is just one of the over 100 cannabinoids that live in a cannabis plant. Other popular cannabinoids you might have heard of are CBG, CBN, CBC, and those lists go on and on and on. Currently, only hemp and hemp-derived CBD are legal in the United States, federally legal, that is. And hemp is under the jurisdiction of the USDA, and CBD falls under the jurisdiction of the FDA. And now, while marijuana is not legal at the federal level, but legal at some state levels, that just further complicates the whole concept of banking them for us in compliance land, right? And then we're going to, now that we understand what hemp, marijuana, and CBD are at a really high level, who are the players in this industry? It's important to understand that we have a lot of players in this industry. And at a very high level, we have three categories of players. We have plant touchers, direct supporters, and ancillary businesses. Now, each of these are equally important and have varying risks associated with them. And the players span across CBD, hemp, and marijuana industries. On this page, we have a couple of examples of those categories or businesses that fall into those categories. But it's important to understand that you can have subcategories that occur out of these. So it can all be based on the perceived risk of those industries. So let's talk about that in the concept of plant touchers. People who are plant touching, you have a grower in that category, and you have a retailer in that category. Now, those risks associated with those businesses can be very, very different. And that's not just my opinion, that's the opinion of some regulators I've talked to, some other experts in this industry. The plant touchers, the cultivators within that industry, are highly, highly regulated by their state. Now, you do run the risk of a hemp plant, a cultivator in the hemp space planting a seed, a legal hemp seed that eventually grows into a legal marijuana plant because of the THC level. There's a risk there, obviously. But the retailer brings a different risk because you don't necessarily know what they have on their shelves from day to day, on their website from day to day, what their marketing look like, if they're out there telling you that their products can cure cancer, all of that under the sun. To me, I believe that retailers deserve a more frequent review schedule and frequent touching by an institution based on those risks. So it can all be subjective to how your institution defines those risks. But one thing you've got to keep in touch is that you cannot blanket statement risk for these industries as they vary from industry sector to different industry sectors. So touch backing on the legal landscape of this, we touched a little bit on it a couple slides ago, but it's important to understand that the legal landscape varies between THC cannabis, hemp, and CBD. Now, we're going to start with the USDA here. The USDA is the reigning hemp authority, and they just sealed the deal on their hemp final rule this month. There was an interim rule that came out last year. It was supposed to be finalized in October of last year. It didn't happen because of COVID. There were also some changes that really needed to be made in there to make it easier in the hemp space for these growers and processors. But they came out in January with the rule, which was a little bit better than the interim rule, a little bit more lenience in the farmer area. But under that ruling, each state has to have their own hemp program approved by the USDA. And there's a minimum set of standards each state must adhere to follow those USDA rules. So they can't be they can be stricter than the USDA rules, but they can't be any more loosey-goosey than the USDA rules. Each state is required to maintain their hemp program, and hemp reporting from the state and sometimes the businesses, depending on what state you're in, is also required on a periodic basis. And again, some states are stricter than others. If you look at Louisiana state laws, they're definitely stricter than Texas state laws. It just varies so greatly from state to state. And then we run into the FDA. And the FDA is the reigning authority over CBD. CBD was approved in a drug for epilepsy, which put it under their control. And then the 2018 Farm Bill stated that they have authority over all the cannabinoids derived from cannabis. And, that's not necessarily a bad thing. The FDA is, there to protect consumers and all that. But what the problem is that they're just super slow movers. And they are moving at a pace much, much slower than the cannabis industry is moving. You run into some situations where some states are actually taking their own authority and allowing it in food and dietary supplements or cosmetics, which is technically not allowed for the FDA. There's going to be a lot of gray area until we can get the FDA to finally say something about CBD, what we are and are not allowed to do and what's safe to do about it. There's a lot of work to be done there. It needs to be done quickly, but that's just my little opinion over here. And I know it's widely shared with a lot of other folks too. So where state authorities come into play is states where THC cannabis is legal, state authorities are the reigning authority. So we know that it's not federally legal, but we know that each state has the ability to pass their own marijuana laws and make their own rules. In regards to the Cole memo, which was enacted quite a while ago and then rescinded during the Trump administration, it directs law enforcement to really allow these businesses to operate unless there's a direct violation of state laws or criminal activity involved. So it is allowed, but it makes it more complicated for us in this compliance land because we're dealing, headbutting against the federal law. every state cannabis laws, whether it's hemp, CBD, or marijuana, they differ, and they're often dynamic. And with that, just makes it so challenging for banks to easily onboard and continuously monitor customers for changes or violations of state or federal laws. So again, if you've been on our webinars before, we always touch on the relevant federal guidance, because for folks that haven't really studied this land and they get uneasy when it's talking about complicated worlds like high-risk businesses, it's good to give you that like blanket, that warm fuzzy blanket of reassurance from your regulators or FinCEN that tells you it's okay to do this. So we have regulatory and FinCEN guidance supporting a risk-based approach to banking in general, with references to cannabis along the way. And this includes FinCEN expectations on banking marijuana-related businesses. In a really high level, it includes recurring SAR requirements for marijuana-related businesses, includes plant touchers, ancillary businesses, and direct supporters. We've also got hemp guidance that finally came out in July 2020. And if you want to really think about that for a second, that's about a year and a half after the Farm Bill passed. That's kind of just, disheartening in a way that we had to wait that long to actually get official guidance. We got a little bit of flirting around and for a while saying, yeah, you can, but until you really hear it and have it in writing, it's kind of, for us conservative compliance people, that can be hard to stomach, right? So we finally have that guidance, and I want you to really think about, if marijuana legalization were to pass, it would likely be up to states just like hemp is. It's likely going to be a messy rollout like hemp was. And while the hemp guidance was welcomed, it was vague in what the actual program requirements should entail. Expect the same for marijuana. I understand that we don't want regulators telling us this is exactly how you should be, because they're not going to want to set people up for failure, and you can't blanket statement processes for banks always. But just expect it and anticipate, while we're all waiting with bated breath of the potential for legalization of marijuana, it just may not be as clean, and it may be even more messy than hemp was, because we're going to talk about, at that time, legacy cash and a number of other issues to deal with marijuana. So now that we've got all of that other stuff out of the way, let's talk about steps to building a compliant cannabis program. I'm not going to read these all to you, and by having 10 steps here, I don't want you to feel overwhelmed. We talked about feeling overwhelmed. Don't do it. We're going to discuss these steps and details on the next slide. You always start with a risk assessment. And if you're anything like me, risk assessments want to make you roll your eyes, because they are painful. They can just be so painful, and especially when you're in a space, in the cannabis space, where laws can vary state to state. It's not federally legal for marijuana. It's just a number of things that just make your head want to spin off your shoulders. But I always moan and groan through a risk assessment. But at the end of the day, I love what it shows me, right? I love the outcome of the work, because it's just so eye-opening to what you can and cannot take on as a financial institution. A risk assessment should always include, at minimum, you addressing and assessing the legal status of marijuana in your state, hemp federally, and how those rules work in your state, CBD, how they work in your state, the opportunities, who in your market is really also banking this space. Is it worth it for you to put the time into it? A lot of we're under the assumption there's not a lot of banks banking THC cannabis, despite the numbers that come from FinCEN on who's reporting MRB SARs. The risks associated with each industry sector. We touched on that a little bit ago. And then audit and exam. What was your last audit and exam? What was the results of it? Can you even afford to even think about this space because you're under, a cease and desist order or one of those horribly, those horrible words that come from regulators? Those are really important pieces of the risk assessment. You also need to take into consideration, and it's built into this, the risks associated with your product offerings. So while credit is not offered to these industries a lot in this space, but if your financial institution is planning to consider maybe lending in this space, you need to really think about the longevity of these businesses. Maybe even put any terms and conditions to protect your financial institution if licenses are revoked. Implications of restrictions and limits. Stuff like no loans collateralized by a crop. Concentration risks need to be considered in here. Considering setting limitations for individual pools based on business type concentrations, geographical concentrations. Don't set yourself up to grow big and into riskier territories unless you have the proper tools in place to do so. If you are unaware of where to start with the risk assessment, especially in this space, you can contact me and I will get you started on the right foot. I've got great tools in place to do that. So don't sweat over it. We can get through it together if this is a space that you're wanting to explore. So next in line, we have board of director approval. Board of director engagement is not a nice to have. It is a must have. Engagement with your board of directors after your risk assessment is important so they understand your financial institution's risks and can make an educated decision on to approve or deny your program build. Now, engagement may look different from one financial institution to another. In my experience, it was executive management that said, hey, we want to do this, said go ahead and do it, and then presented to the board of directors. I was okay with that because I got the green light from the executive management, but I certainly wasn't going to sit there and just complete a risk assessment and try to build a program without them being involved. You could be wasting a lot of time if it wasn't in a risk assessment. You definitely want to have the green light from them first. It's time intensive and you don't want to be accused of wasting your financial institution's time. Board sign off before program launch is 150% necessary, and it's expected by your regulators. They're going to want to see that they signed off, what they were educated on. And a healthy board of director engagement involves training the regulators on requirements in this industry, best practices in this industry. They need to remain informed and up to date on the industry and the legal landscape. They demand, and they should, if any engaged board of directors should really be demanding timely and accurate reporting on this industry. They really also are required to, maybe not all of them do, but they really should, if they're really strong board of directors, maintain intimate knowledge of your financial institution's risk profile, risk appetite, goals, and strategic objectives. And my favorite type of engagement with the board of directors is one that encourages a credible challenge. So they just want to make sure that you've thought it thoroughly through and are covering all the risks that may be presented to your financial institution. Next up, we have regulator buy-in. And, as maybe somebody who's unique in this industry a little bit, I love my regulators. I have always had a very good relationship. Now, has it always been pleasant? No, maybe not sometimes, but what I really had to understand about regulators is that they have the same goal we do, which is protect the financial institution, protect the financial integrity of the banking system of the United States, right? So really, how and when you approach your regulators on your program may depend on your relationship with your regulator. You need to really look at finding that sweet spot, It often, and best practices usually occur after a risk assessment so that they can share best practices on what other financial institutions are doing in this space to be successful. And you should let them review and get their stamp of approval. And I put that in air quotes prior to full program launch. Not every regulator will put it in writing, but man, if you can get it, that makes you sleep better at night. Um, really, after your risk assessment, it really helps them understand your financial institution's limits, if there are any set, so they know at the time of your exam if they need to bring additional help to finish the scope of your exam. Involve your regulator as your program matures. That's very, very important. When I was talking to my regulators, they said this program from the very beginning looks pretty solid. But there's going to be stuff that you learned over time. There's going to be customers that burn you. There's going to be customers that don't burn you. There's going to be best practices that you learn over time. So involve me as your program matures so I can see that you're actively being engaged in this program and are looking to always protect your financial institution against risks. If the structure of your program has evolved or standard practices have evolved since they first saw your program, then let them know so they aren't caught off guard during your next exam. In my history of being in this space, the one thing I've learned is that when you engage your regulator throughout the year, they are a happy regulator at exam time because they're not caught off guard. So once we've gotten through all those other kind of heart-wrenching steps sometimes, as we go through that process, a really huge and critical piece of the puzzle is designing a robust customer onboarding system. A well thought out onboarding process is a critical step in a successful cannabis banking program. It should be designed to filter out any unwanted customers from the start. Sometimes this is known as a pre-qualification stage. And in this stage, it allows a financial institution to focus on customers they truly want to bank instead of wasting your customer's time or your customer prospect's time because they didn't fit your financial institution's risk appetite. If the prospect passes the pre-qualification stage, then they should be sent a full application and then fully vetted by appropriate staff. So you can have this set up in many ways, but usually a best practice is you have a relationship manager that sends a pre-qualification. They review it maybe and see if this customer might fit the appetite, and then they get a full application that's then sent to appropriate staffing for vetting. You really should allow for businesses to have the capability to fill out an application online that includes attestations. This allows for a higher volume of customer applicants by essentially creating a virtual branch for your financial institution, which is super important in the time of COVID. If your bank has decided to invest in a cannabis banking program, which are typically pretty profitable on many levels, it's important that you have backups for people not being able to go into a financial institution. Building basically a virtual branch, if you will, for these customers to apply through. Robust questioning should also be included in the account opening process. This ensures that account opening staff is able to protect themselves and properly detect any new cannabis prospects. So let's just take, for example, if the customer were to walk in the door and not go online to fill out this application, will they then, will that frontline account opening staff be able to detect them? The only way is if you have questions built into your account opening process to help them detect and redirect those customers to that online application or to appropriate staffing to complete the account opening. The responsible line of business conducting the vetting process should be and must be extensively trained on the dynamic legal requirements of the cannabis industry. They really should be keeping up to date almost quarterly, if not sooner than that. I read all the time on this industry because that's the only way I could keep up with what was changing, because there's so much happening in this industry. A full EDD review of the business and related parties should be included in the account application review. You should be reviewing, there should be specific applications for the specific lines of businesses. You should be looking at license verifications, adverse media screens, and numerous things. They're all listed on this screen here for you to review. And last but not least in this process is the site visit to validate customer operations. It's very, very important to have site visits. Now, it's up to you, your board of directors, your management, your regulators to decide whether that's actually the case or not the case. But I've never seen a financial institution not have site visits required. And while it's time consuming to do, it's very important to validate those customer operations. It will also is a key to you sleeping better at night. So ongoing EDD requirements are another important part of this whole puzzle, because really we all know that the hard part starts after the customer is onboarded. Setting these clear expectations at the time of onboarding your customer will make your life easier for ongoing monitoring. Usually, historically, I would, during the site visit, with somebody else accompanying me, you never go by yourself, set those expectations with the customer saying, look, I'm going to give you the green light to bank here. It is my expectation that you help me defend why I chose to bank you. So I'm going to need that open line of communication. And when I ask for something, I'm going to hope that you provide it in a timely manner and let you know that's an expectation of banking here. So if something were to fall by the wayside and they stop responding to you, that's a reason to exit. You should also monitor transaction activity to look for anomalies that may be outside of their normal pattern of behavior or stated nature of their business. And staying abreast of license expiration dates, adverse media, website changes, key parties, seed to sale transaction comparisons, all that jazz is expected in this cannabis space. Your regulators are going to expect that. Your auditors are going to expect that. It's basically non-negotiable at this point. The more robust you are, the less likely you are to get burned by your customer, criticized by your regulator, or end up in the paper like that bank we talked about, or that financial institution we talked about at the beginning of this webinar. Determining whether it is expected by your board of directors or regulators on how often you should redo your site visits, revisit your site visits, should be part of your ongoing discussion, ongoing EDD requirement discussion. My institution required it before the customer was onboarded and annually hereafter. And it was best to do it based on the industry sector. So I wasn't going to go visit a cultivator in the winter unless they grew indoors, because there was nothing to see there. I wanted to go see them in August, September, probably even October, where I could see what they're growing and kind of validate with my eyes what they're up to. The other important piece of this is that these reviews need to occur on a scheduled, reoccurring basis and should include a revalidation of information from your customer on a recurring basis. So now let's move into policies and procedures. You should always design your policies to be flexible and not pin you in a corner. And I cannot express that enough, guys. Don't set yourself up for failure with your policies. It's okay to leave a little gray area in there. It's okay. And I'll even say that to a regulator. It's okay to do that. You never want your policies to be designed to fail. And you need to ensure that your policies are well known and distributed to everyone at your financial institution. You also need to make sure your procedures are robust and well known at your financial institution. Every customer touching department needs to be thoroughly trained, and you need to make sure you have a main contact or department living in your BSA, whether it's BSA compliance, wherever, in charge of reviewing those procedures on a reoccurring basis, because as your program matures, you're going to have to update those procedures on a regular basis. You need to also ensure that you have proof your financial institution staffing and board of directors have read and acknowledged these policies and procedures. Because, guys, and this is no news flash to anybody who's been in compliance before, if you don't have proof, you're setting yourself up for failure in the terms that staff may claim that they didn't know about these policies, procedures, and you're in the eyes of a regulator, if it's not documented, it didn't happen. This also allows you to hold everyone accountable for understanding your cannabis policies and procedures when there's a breach to the policy. Policies, as many of us know and as many of us experience, have to be approved by the board of directors every year. Same goes for your cannabis policy. Again, they must be reviewed and revised according to dynamic state laws and improvements made to your program. And you should include in these policies and procedures who has the authority to approve or deny an account. And you need to clearly state who has the authority to close a relationship if it's determined to be outside of your bank's risk tolerance. You don't want to end up in an argument or some type of contest with your relationship manager because this guy has a lot of deposits on or making a lot of fee income, but it's outside of your bank's risk tolerance. You need to define who has the authority to do it. In my opinion, it should live with the BSA officer. Training is also the next one of the most important pieces of this puzzle, right? Cannabis related training should be required for all new staff before they are given authority to open accounts. Don't let them open accounts until they've had all their other training as well, but especially your cannabis. Otherwise, you're going to have people onboarding these guys without even realizing that there's any problem in doing so, and you're going to have something sneak up on you that's going to bite you for it. Existing staff should be trained prior to program launch. Again, same thing as new staff. Don't want to get bit by somebody who snuck through. Training should be tailored to the financial institution's line of business. So, for example, new account staffing training may look different than loan servicing training. And training should never, ever be overcomplicated. They should know how to detect cannabis-related businesses or activities and how to redirect identified businesses to appropriate staffing. The more you complicate it, the less they're going to pay attention. Keep it simple. Keep it simple, guys. Annual training should occur to help staff stay abreast of current cannabis procedures at your institution because they may have changed from the last year. So get them trained annually so they can't make excuses they forgot. Board of training should also occur annually after initial sign-off. And that doesn't mean them just watching a 20-minute video that you created because they may just sign off on that. It's good to have face-to-face interaction and make sure that they really understand and have the ability to ask questions on what they're being trained on. So ongoing testing and controls is an important part after your program's built. And as your program's built. So as part of your program build, your financial institution should initially consider operational limits and risk thresholds. after your program launches, your financial institution should continuously report on those limits and thresholds. Continuous reporting ensures your program is still within your bank's risk appetite, because you never want your risk appetite to outweigh your operational limits. And take it from the gal right here who let her program grow too big, too fast, without proper staffing, and I had to eat it because of it. And we ended up having to hire a bunch of people because, number one, and that's necessarily my fault, I didn't know any better. There were no other people doing this space. But you don't want to be me. Take my lesson learned. Speak up. Talk about your operational limits. Talk about what your limits should look like with the current staffing you have, with the current tools that you have in your pocket. And if your institution is wanting to make sure that this program is robust, that it can grow, that it can make money, they need to be willing to invest in it, whether that's staffing, whether that's proper tooling, any of that kind of stuff. Say it, guys. Say it, or you're going to have to eat it later. And don't be me. Don't be me in that space. You should also take into consideration that you should have designated staff that stays abreast of your cannabis profile and is able to document, and importantly so, in a digestible manner for others to consume, the operational and risk threshold impacts. So if you've set pools of stuff and you're growing, nearing that limit or over that limit, those need to be reported. Monitoring and reporting. This goes based on what we just talked about in the last slide. When your program is measurable, as designed through your ongoing testing of controls, you have measurable results to give your board of directors and executive management. So during your program build, you should design reoccurring reporting that should be socialized and reviewed by the board of directors and executive management. Action plans should be designed to be triggered by metrics and events. Plans should be well designed and tested and should consider things like liquidity testing, where if you are banking a certain industry sector and you're depending on those deposits from that industry sector, you shouldn't be, but are you? And that licensing, or whatever they're doing gets outlawed, what is that impact going to look like to your financial institution? Things of that nature. Triggers should be escalated to executive management and the board of directors for formal decisioning, as they should be made aware and stay abreast of what's going on at your institution to help decision what your next steps are, and document that stuff, guys. Document what their commenting is, what their thoughts are on your reporting, so that you have a trail of you keeping everybody in the loop on this. So we talked about all these pieces of the puzzle, and it can, like I said, it can seem really, really overwhelming. And when we were talking about the program build, we briefly touched on having the right tools in your belt to help assist with your program build. And our sponsor for this webinar today was RiskScout, and we at RiskScout have built an excellent set of tools to any risk business, high-risk business program that you're running at your financial institution. Because we briefly talked about pre-qualification and full applications, and our program is designed to do that. We help filter out the noise so that you can bring customers in that fit your risk appetite. We assist in the onboarding process by validating KYB information and reviewing important information like website and social media reviews to look for red flags or claim of efficacy, watch list checks, adverse media of the business and key individuals. Adverse media is so important, guys. You may have somebody that checks all the boxes, but if they pose some type of reputational risk to your institution, that may be a reason not to onboard them at all. We allow the financial institution to communicate with the customer directly through our platform, eliminating a lot of runaround and back and forth nonsense that you typically have to deal with without a tool like this. And it's all designed to track everything for audit and exam purposes. And then we all know that the real work, like I said before, starts after the customer is onboarded. So gone are the days of your spreadsheets with this platform. I live that spreadsheet life and it is miserable. And it gets even worse when you grow past 20 clients, 30 clients, 100 clients. It just becomes unmanageable. So here, we end your spreadsheet days and welcome you to automated reoccurring reviews and touch points with your clients, all customized by whatever you want in your review scope, which doesn't look the same at every financial institution. We set reoccurring checkpoints with the clients to revalidate pertinent information so that you can complete your review in a timely manner. And then we are centralized. This is my favorite part, is the centralized one-stop shop for your audit and exam prep, guys, because everything is tracked in here for your convenience. And it's not just cannabis. It can be anything you want. Cannabis, crypto, MSBs, ATMs, you name it. It can be monitored in here. So lastly, I'll leave you with this. We'd like to count your call to action to being this. We have a high-risk banking group on LinkedIn, and we're just a group of like-minded people sharing best practices, emerging trends, and sometimes cute pics of my dog, funny memes, things lighten your day up, because we all know compliance land can be a little bit sometimes dry and sometimes really depressing. So we like to have a good time in there, but we're also there to professionally assist each other with any questions or concerns. So with that, I would like to ask you guys if you have any questions. And if you don't feel comfortable asking them on here, you're welcome to contact us or contact me. I'd love to connect with you guys on LinkedIn. I share a good amount of content on there that I hope would be relevant to you guys. And please feel free to reach out at any time.
Hey, Kristen, can you hear me?
I can.
Great. Well, I have a question from one of our attendees, and I can't seem to get back to the question pane here, but he was essentially asking, how do you look at a situation where the land is leased to a THC cultivator or farmer? How do you look at that from a risk perspective? And Brad, if I missed that, please send it back in because it somehow disappeared, but that was his question.
Okay, so repeat it one more time, Justin, sorry.
So you have a cultivator, right, who's leasing land from another farmer, or leasing land from an individual, plus you have that business, right? So you have two different, let's just assume they both bank at the bank. How are they looked at from a risk perspective and managed?
Yeah, so there's a different approaches for us for those situations occurring. I'll give you a good example. Is in North Carolina, for the first year of the couple first years of the farm bill, you couldn't have a farming license to grow hemp unless you had 1 year of farming income on your last year's taxes. So we had a lot of people that were leasing land or growing hemp that was on somebody else's property. So a lot of those times we would take and ask for contracts between those, the cultivator and the grower, or the grower and the landowner, to say, to truly acknowledge that they, number one, know that the hemp's being grown on their land, that they understand the licensing would make them responsible for if there were to be a hot crop or something like that, and that these parties have a mutual agreement there. And that just covers every party involved in that point.
Hey, Kristen. Yeah, for some reason the questions are disappearing here. I might have to jump back in. There was another question, and I will get to the two here, but I'm gonna have to shut back down and come back in. But there was a question about what's one thing you wish you would have known before starting your cannabis program? And I'm gonna jump back in here in 1 sec.
Okay. Well, I will tell you, I love that question, because I truly wish that I would have known the limits that I should have set by just having a manual operation of everything. I truly by accident set myself up for failure in that space and had to be vocally and annoyingly vocal to everybody under the sun to finally get some help because I did not have proper tools. I didn't have the proper staffing to grow, for this program to grow. And that's really the problem, is that when you turn a switch, guys, and I say this, you probably hear me say it all the time, it's a field of dreams situation. It's a if you build it, they will come situation, right? I didn't expect that we never did any advertising. I didn't expect to go from literally having 3 to 65 in a month and a half. And if I'd have known what I know now, I would have said, I need the proper tools to do this with. I didn't know, well, at that time, there probably weren't a lot of tools out there. And that's what I love so much about the RiskScout platform, is it solves all those headaches, all those nights I laid awake problems. So I would encourage every financial institution, anybody having these conversations, is to really look at where you are and know that, and just plan that it's going to be bigger than you originally thought.
Hey, Kristen.
Yeah.
So I'm back and I got my question panel back, so that's good news. And so back to revise what Brad was asking for. He's really asking, is the farmer who leases the land an MRB?
That's a really good question. I think that is up for interpretation. I would think no. If you have that contract between the actual business and that land leasing, I would not consider them an MRB.
Yeah, I will add, we've had one institution who consider them an ancillary, right? So maybe a type 3 or type 2, and have still required, security and some of those additional elements.
Yeah, and I think that you can accomplish all that, during your site visit and all that understanding. But I really think that, if you want to put them in a tier, possibly a tier 3, but you're not going to really be able to take them out of a tier 1 unless you have that contract that knows distinctly that that is literally the only thing that they are doing for this business, is providing the land.
Yeah, and I will also say, add another thing. I've seen those cultivators who are leasing land saying that they're not operating the business, but then they end up in the UBO list, right, with some type of significant ownership. So you got to think through that.
Yeah. Yeah.
Yeah, and then Irene asked, yeah, we're going to share the slides to everybody. So we'll send those out. We, as Kristen had said, she had really developed a slide so you can take them away and do something meaningful with them, not just kind of a gloss presentation. So we'll send those out to you. There will also be a survey that comes out for additional content. So we'd love to hear from you guys in terms of what you're looking for. We're always looking for relevant topics, especially in the high risk business space. And just to reiterate, RiskScout actually does quite a bit more than cannabis related. So we've been doing a lot of MSB workflows. We've been doing ATM workflows. And also crypto is coming up now, pretty interesting space Kristen and I are diving into. And so really, it could just even be NGOs or intermediaries. If you have challenges with your EDD process for those are topics we'd love to talk about. So if you're dealing with those, think about that on the survey, and if you feel like you'd like to see how to automate that, or you'd like to dive deeper into regulations, let's make that another topic. And it looks like we have one last question. I guess, Kristen, if you were to be sort of helping this live, what is it, Live Life CU, right, in their state, given kind of where they're at, what would be your recommendations, to really for everybody, avoid another enforcement action, avoid that? What are the key things that, you are helping that institution, sort of put in place to go forward?
Well, a really robust onboarding to make sure that they are, banking the people that they're in their risk appetite, but also the reoccurring reviews of these clients, ensuring that they really know their clients and know their customers. So screening, the ongoing screenings of adverse media and other KYB information, as well as transaction, history, and really being able to educate them on what is normal for a business to be doing and what's not.
Good. That's all the questions we have. So kick it back to you, Kristen.
All right. Well, guys, it was great spending time with you today. Thanks for the questions, and we will get this over to you guys so you have it as a tangible working piece. But like I said, as always, I love to talk high-risk business. So contact me anytime, guys. I hope you have a great St. Patrick's Day.